Look, we live in interesting times. During this crisis, there's an opportunity to change how New Zealand fundamentally handles its money supply. And our solution is being advocated by a growing number of people. The time is right to initiate a change. Before we start our presentation, I would like to introduce Positive Money New Zealand's patron, Brian Gould, and ask him a couple of questions. Brian was a New Zealand Rhodes Scholar who pursued a career in the UK as a diplomat, Oxford Law Don, television journalist, and a politician. He was a member of Labour's shadow cabinet and contested the UK Labour Party's leadership in 1992. He returned to New Zealand to become Vice Chancellor of Waikato University in 1994. Brian has written a number of books on politics and economic policy. Brian, welcome.
Very good to be here.
Thanks. Firstly, can you tell me, what is a patron and what interested you in becoming Positive Money New Zealand's patron?
Well, I'm not sure that I know exactly what a patron is, but I assume it's somebody, as is true of me, who wants to signal their allegiance to a particular cause, but who isn't available necessarily for any hard work of an organizational nature. And I really just wanted to associate myself with a campaign that I very strongly agree with.
Makes sense. Thank you very much. What do you think of our government's financial stimulus package so far?
Well, I think it's a commendable effort, but I think it misses the real point, and that is that it hasn't understood the capacity of any government of any sovereign country to create money for whatever purpose it decides. And unless we understand that, as other countries have done, they have voluntarily in a stage of great national crisis.
Thanks very much, Brian. I'll now pass over to Don to start the presentation. Don?
Oh, thanks, Cliff, and good evening, everyone. And thank you for joining us on the call. As I said, my name is Don Richards, and I'll be explaining how we can create an economy that works for everyone. To start with, I'd like to provide background on Positive Money New Zealand and a bit about myself. We are based on Positive Money UK, which has been running since 2010, and our campaign was launched in August 2011 by my late wife, Sue Hamill, and I. We're part of the International Movement for Monetary Reform, which has 18 organisations around the globe dedicated to creating a money supply that works for society and not against it. I moved to Whakatane 5 years ago, and prior to that, I lived in Wellington. I've worked for a number of key industries, from BP Oil to the New Zealand Dairy Board and Fonterra and Transpower. I was the Quality and Environmental Manager for BRANZ, the Building Research Association of New Zealand, for 11 years, up until August 2016, and I'm now a health and safety consultant. I'm passionate about the environment, and I've organised over 23, and in 1999 I was awarded the Wellington Regional Environmentalist of the Year award. I've run for Parliament a couple of times as an independent on a platform of monetary reform, and I sprung a tie electorate against Annette King and Chris Finnison.
I'm an electrical engineer and a businessman employing 20 people. I have a manufacturing plant in Auckland and branches in Christchurch in China. I'm also the Auckland spokesperson for Positive Money New Zealand. Now you can see that neither Don nor I are economists, so we take our lead from Positive Money UK, which has a panel of economists and other experts to guide them.
Now, to get things started, we'll show you a 7-sharp clip that sums up our campaign quite nicely.
Yes, hello. Hey, today on Facebook we asked you how much you know about the money you're borrowing. Some very interesting answers and some stupid answers. Facebook's a bit like that, where you can add your 2 cents to the national debt by visiting 7sharp.co.nz and having your say.
Well, you might have a big fat mortgage and a big fat interest rate to service that mortgage. I know I certainly do. But what if we told you that the money the bank lent you doesn't actually exist?
You're paying interest on a loan that's been conjured up out of thin air. Sounds crazy? Watch this story by Heather du Plessis-Allen.
People were becoming more and more indebted, paying the price that they can't afford simply to have a home. It was like a light went on. The banks created money out of thin air.
Just in case you didn't get that, here it is again.
The problem with money is that it's created by private overseas owned banks out of thin air and then lent to you and I at compounding interest.
Created not really like this, more like this. But ultimately, these numbers do represent this, the hard stuff. Now, I know what you're thinking. You're thinking banks don't print money. The government prints the money. Or maybe the Reserve Bank prints the money. Well, that's what I thought too, but it turns out that we are all wrong.
The banks create the loan out of nothing and then give you the money that they don't have.
Don Richards and Sue Hamill, a normal Wellington couple who want that sort of lending to stop. But before we go there, let's get our heads around how this works.
Let's pretend for a moment that I'm the bank and you want to buy a house that costs $500,000. So you'll need to give me $50,000 as a deposit.
Okay, so there's my deposit. So I need $450,000 from you.
That's right. So where am I going to get the money from? I just go into...
Because you obviously don't have it.
No, that's right. I just go into the computer, type in 450, hit enter. There's your money. There's $450,000.
You've just made $450,000 out of absolutely nowhere.
That's right.
That I now have to pay interest on.
That's right.
Money that you don't have, never have had.
That's right.
And this, through home loans, this is how money is introduced into the system.
Yes, that's right.
But it feels a bit like a trick.
Well, it is, really.
We checked the figures. Last year, this much new money appeared in the country.
It's almost like a big Ponzi scheme.
Did you just call banks a big Ponzi scheme?
I said it's almost like a big Ponzi scheme.
You're probably thinking there must be more to it. No, this is an International Monetary Fund document that backs up what we've just told you. See this? Banks are almost fully in control of the money creation process.
If you want to read this for yourself, you can find it on our website.
Still unconvinced?
No, this is this is what you learn in first-year economics at university. This is how banks work, and there is no sort of great mystery to it.
Shamabil Yacob, economist, quite surprised that we're, well, surprised.
If you have faith that the money is there, then it all works, and that's what our system works on. It's based on faith that the institutions, the banks, the system that's in place, the rules and regulation protects us, and that we won't go bankrupt, and we will have our obligations paid.
Exactly. So why should you care? Well, some say because banks can just keep producing money, it'll just keep driving up the price of our houses. And if we lose faith, you could lose all your money in the bank.
The chairman of the UK Financial Services Authority came out at the end of last year and said the primary cause of the financial crisis was the fact the authorities had not restrained the ability of the private banks to issue and create the money supply.
Are you advocating that governments print money?
Absolutely, but in limited quantities.
Former London banker Raf Manji, former colleague of John Key, he thinks the government should print the money and use it to pay for Christchurch's rebuild.
The thing about the government is that they can issue the money supply interest-free. So, for example, for an infrastructure project that needs say, $1 billion, the government can actually issue that directly into circulation. There's no interest charge. If the banks issued that into circulation, it would come with interest.
But what's wrong with the way that we do things now?
There's no control. That's the problem. And the problem is also, why should we be paying interest to fund public infrastructure projects when we don't need to?
Or all that interest on your mortgage, say Don and Sue. They still owe $140,000 on their house and don't think that much debt is fair.
When I looked at the the future for my daughters. I've got 2 young girls who've just come out of university. They are saddled with a student loan. They have to save for their retirement, but they also want to buy a house. So they're going to be in debt all their lives. And that's not the future I want to leave for my children.
Now, we could have had any number of economists in to discuss the yin and the yang of what we've just seen, but we'd rather know what you think, frankly.
All right, look, a couple of points here. First of all, the government lending money interest-free, that's never going to happen, because what else does the government do for us for free? Nothing. So forget that. That's not going to happen. As far as the interest rates on the banks go now, I've been having a bit of a scan around. Obviously, it's going to vary with depending on which bank you go to and the term you get it over. But, you know, 5-ish% to 6.5%, 6.7% is what the rates they're lending at are. The OCR, which is the basis of what these guys operate from, has been 2.5% for nearly 2 years. It's 2 years in March.
Gap between them.
And people
Why
are going to,
are they not
that's
coming
not what it's
down?
all about, but it's a big part of it. That's their starting point. So if you're wondering why, you know, the interest rates are so high, you have to say, doesn't the government need to intervene and get these banks to get a bit more realistic with their profit margin? But the bottom line is people saying, look, it's a Ponzi scheme, it's going to tumble down. No, it's not, because New Zealanders are hardwired, and most people are hardwired to have a house. To have a house, you've got to have a mortgage. It's not going to tumble down. There's nothing to believe in. We want a roof over our head. We want bricks and mortar. It's going to work. A Ponzi scheme just depends on faith. This doesn't. It depends on people wanting to have a house. We all do. Simple.
Keen to know whether you're okay with it, though. Don and Sue plainly are not. They're running a campaign similar to ones in the UK and the US at the moment, calling for a complete overhaul of the New Zealand financial system. Ha, sounds so easy, doesn't it? If you want to know more about their campaign, their website is on your screen now.
And guys, an interesting reaction on Facebook to this today. Most people weren't aware that this was the case, but feel quite helpless to do anything about it. There's that sort of lethargy or that hopelessness. And one interesting comment from Josh Barr came in on Facebook, and Josh said that, well, leverage played a really large part in the global financial crisis, so it's definitely something to be mindful of, something that we should be doing something about. By the way, in your profile pic, Josh, it looks like your girlfriend's got a bit of leverage on your face. But thanks for contributing, and it's always welcome, Facebook or Twitter.
Could I interject here? Is that possible? Yes. I think I didn't give a full answer to the question I was asked earlier as to why I had become a patron. I didn't indicate why it was that I had become to support the aims of positive money. Some of you may remember, there's no reason why you should, but I got involved in a long the Herald with Don Brash, the former governor of the Reserve Bank, when I asserted that the banks created money. And he absolutely denied this, notwithstanding the evidence that I was able to produce from a report by the Bank of England and by other central banks, not least our own Reserve Bank. And that then prompted me to take a greater interest in the whole question of who and for what purpose money was created. And a friend of mine in the UK alerted me to the work of a Japanese economist who was virtually unknown in the West, Osamu Shimamura. And he was widely regarded in Japan as the father of their post-war economic revival. And he understood very well, and indeed guided the Japanese central bank to do what he wanted, which was to issue money in order to create productive capacity. And when I understood the work that he had done, I then turned back to my great mentor, as it were, John Maynard Keynes, and I realized that Keynes himself had often absolutely supported this approach. And his view was that there was whereas there was always going to be a scarcity of land, there was never any reason for a scarcity of money, that a sovereign country could create as much money as it wished. And that the downsides of that, often said to be inflation and the loss of value of the currency and so on, were very unlikely to be inflationary if the increased money supply was matched by a subsequent increase in production. And that is exactly the point that I think positive money wishes to make. And indeed, there are many historical examples of how this worked. Franklin Delano Roosevelt, in the early days of the Second World War, before the Americans had joined the war, he understood that Americans were likely to join the war and that they needed a boost to their industrial capacity. So he used exactly this technique to prompt that increase in production. And that's one of the reasons we won the Second World War.
And to reiterate what the clip said, private banks create money out of thin air and then lend it to you and me and charge us interest on money that they never had. Now, unfortunately, this is only half the problem. There's no legislation on our book that says banks can create electronic money, nor is there legislation to say they cannot. Only the Reserve Bank can create our notes and coins, and the loophole that allows banks to issue our electronic money needs to be closed.
Nearly every dollar in the economy today was created when somebody went into debt. So where do banks put this created money? Mostly, they pump it into the housing market, massively inflating house prices during booms. It's very profitable for banks to lend money on housing. It's also very secure with little risk to banks. If you cannot make the payments on the loan for the house or farm, banks can force a mortgagee sale and you may lose all your equity. Remember once again that the banks created the money out of thin air, and yet you and I have to pay interest on it from money we earn.
Now, as I said before, this is only half the problem. And to explain the other problem, this graphic of the current system will help explain things. New money is introduced into the economy by private banks as loans and is shown as money entering the system via the taps, loans and debt. As the banks create the money themselves, the main constraint is people's ability to take on higher and higher levels of debt. This created money distorts the property market and allows prices to increase year in, year out. Now, banks make enormous profits, more than $5 billion each year, and that money disappears overseas. It's a huge drain on our economy. There is, however, a bigger problem. When people repay their loans, that money disappears. It is created from nothing, so it must return to nothing. In banking terms, money is destroyed once the loan is repaid. This is ridiculous, and it's probably why Sir Mervyn King, the governor of the Bank of England, said, of all the many ways of organising money, the worst is the one that we have today. For our economy to work, more people must get into debt than get out of debt.
In times of recession, four things happen. First of all, people take out fewer loans as confidence in the future declines. 2, more people repay their existing loans. 3, banks lend out less money as their confidence in people's ability to repay the loans diminishes. And 4, governments introduce austerity measures, cutting back on their spending, which makes matters even worse. This further reduces the amount of money in the economy, prolonging the recession. When confidence picks back up, people take on new loans faster than old ones are repaid. Banks become bolder and lend more. The government spends more, creating a boom. This is the boom and bust cycle, which is an artificial construct based on a flawed monetary system. Here's our proposal on the screen now. The positive money solution would have the Reserve Bank issue our money supply debt-free, and they would take control of the tap, as shown in this graphic you can see on your screen now. An independent body called the Monetary Policy Committee would review the state of the productive economy and would tell the Reserve Bank how much new money could be created. The new money could be spent into the economy by the government spending on infrastructure projects such as hospitals, roads and bridges, or new schools, and the need for government to go into debt would disappear. Our government debt is currently $110 billion, and the government pays $4 billion in interest alone each year. This equates to $11 million a day that does not need to be spent. When you add the principal repayments that don't need to be made, the amount of available money is staggering. Imagine what we could do with all that extra money.
Now, there'd still be a place for private banks, though. While they would no longer be able to create money from nothing, they would have to attract deposits from those willing to invest. In this way, loans from the private banks, once repaid, would be available to be lent out again, putting the plug in the bath. So you can see that there's a plug in the bath, there's no money falling out the drain pipe. The boom and bust cycles would smooth out, and the economy and the amount of money in the economy would rise. With more money in circulation, New Zealand would move from a low-wage economy to a high-wage one, and New Zealand would prosper. This is what happened in 1936 when the first Labour government under Michael Joseph Savage passed legislation to allow the Reserve Bank to issue money for infrastructure spending and for the construction of housing. Now, back in 1936, we were in a worse state financially than we are now. Within 2 years, the Social Security Act had been passed to safeguard the people of New Zealand from unemployment, sickness, and other exceptional conditions. Not only was the welfare state instituted, but tens of thousands of state houses were built that provided meaningful employment for thousands of people. New Zealand emerged from the Great Depression sooner and in better shape than most other nations. So this all goes to show that we've done it all before, and we can do it again. There is a plan B for the New Zealand economy. Now, we do not have to consign beneficiaries and superannuations to a level of financial support that does not allow them to live with dignity. We do not have to consign our children to crippling levels of debt from student loans and unaffordable housing. There is no need for engaging in fracking or mining our conservation estate to grow the economy and create jobs. Our economy will grow organically and jobs will be created. We will become a high-wage society, and people will not need to work 2 or more jobs just to get by. Child poverty and homelessness will be a thing of the past. Now, this message does not just apply to the left. The right can use money for spending such as tax cuts or reducing the national debt, depending on what their priorities are.
Thanks, Don. That completes our presentation. Before I open up to questions via the chat function, we have a couple of prepared questions. The first one, the 7 Sharp clip appeared to end on a negative note with a commentary from one of the presenters. What do you think, Don?
Well, it's quite ironical that the commentator did say that it's not a Ponzi scheme because Ponzi schemes rely almost exclusively on faith. But if you listen to what Shamabel Jacob was saying, that the system is based on faith. That if we were to lose faith in the system, because there is no intrinsic value in what the banks are creating, then the whole system would fall. So that comment actually reinforces the fragility of our system.
Okay, thank you. Now, may I remind people, if you want to have a question answered, would you please type it into the chat function? Our next prepared question came from a follower overseas after reading our latest newsletter. He asks, it seems that among the economic advocates of your solution, it's not clear whether they favor the Reserve Bank of New Zealand lending the money and the government having to borrow it from the Reserve Bank, or whether the government could merely spend the balances that the bank ensures show up in its account, called overt monetary finance. What option do you favor? Don?
Well, we don't have a preferred option. We just want to make sure that it's fiscally neutral for the government. So if the government gets the money directly from the Reserve Bank without the borrowing and lending and creation, then that's a clean way of doing it. But for a lot of people, they would have difficulty getting their heads around the fact that the government is just going to create money out of nothing and then give it to the government to spend. So with the lend and borrow scenario, it may be a bit more palatable for the electorate to swallow. But so long as they're both fiscally neutral, we don't have a burning desire either way on which is to prefer.
Can I come in just for a moment?
Briefly.
So that's just a matter of how the bookkeeping is done. So that if you maintain double entry bookkeeping, then the Reserve Bank will have to have an asset on one side and there's a liability on the other side. So what we talk about is a perpetual zero coupon bond. So still no cost, no interest. But if you have the double entry bookkeeping, then you've got both sides of the thing tied up so that it doesn't look so strange, shall I say.
Sure. Okay. Thanks for that, Lowell.
Okay, we've got a question come up here. Is it conceivable that we could move to a no-tax economy with the positive money proposal?
Ooh, I don't. Well, it's conceivable, but it's highly, highly, highly unlikely. Taxation does have a function in that it can mop up excessive liquidity in the market or in the economy. So if too much money is being held onto or created, then taxation is one way of returning that money into circulation.
Okay. Dawn, are you all right to take a question from, who is it, John and Kate, directly by audio?
Yeah, sure.
John and Kate, you can, I don't know which you are, John or Kate, or John and Kate together, you can unmute yourself and ask Dawn your question directly.
Yes, just John. I'm down in Christchurch. I'm a social credit supporter, but I'm not a member of the party. But just the ideas and it's very much in the same camp as what the positive money recommendations are. I also.
You have a question, John?
Yeah. Yeah. How much penetration are you getting into Grant Robertson and his clique in the finance departments there? Because I can remember talking to the Littleton MP before the last election, and they're just so stuck in their own wisdom. They can't think outside the box. How are you going to?
Okay, Dawn, answer that one.
Yeah, look, because we have a crisis in front of us, it is focusing the mind, and so they are looking at innovative funding solutions. We had some very good exposure to the Finance and Expenditure Committee, and that's going to be the feature of our next presentation. And so we got contact, face-to-face contact with cross-party representation. And to some of them, it came as a huge surprise. that the Reserve Bank didn't create a lot of our money. And over the years, we have approached a number of politicians. And the only politician to actually have listened to us and done something about it was Russell Norman. He suggested that the EQC funds that were depleted during the Canterbury earthquake would be topped up by Reserve Bank money. Now, he was laughed at by both the Nats and from within his own party. So there was little appetite for it. But now, as economists around the world and in New Zealand are starting to pick up on the idea, and the level of debt that we will inherit if they borrow the $52 billion in total that they plan to spend, will burden our children and grandchildren. They are looking at Reserve Bank funding directly to buy up stock. And it's interesting, they're looking at, I've just heard that they're looking at infrastructure spending to bypass the Resource Management Act so they can get some railroads built if they can put in some roading and other infrastructure projects. So it looks
All
like...
right. Thanks, Don.
Okay.
Yeah, that's a good answer for that question, I think. We got another one up here. What was
Thanks for stopping me, Cliff.
You're welcome. What was the status of the Positive Money New Zealand petition before the Select Committee prior to Level 4 lockdown? And are you happy with the questions posed and answered thus far? That's from Michael Cooper.
Sorry, what did you say? What is the status of?
Yeah, what's the status of our petition?
Oh, right. Yes. So it is with the Finance and Expenditure Committee for them to consider whether it gets put before the full House. So it's outside of our hands. And it's interesting, we did have a very good conversation with Deborah Russell, the chair of the Finance and Expenditure Committee, and she said, look, here are half a dozen questions that you'll probably get asked and come up with the answers. And of course, they asked completely different questions than the half a dozen that we'd prepared. But yeah, there were a couple of questions there. There was one particular member who had a particular focus on if the banks stop lending, then house prices would collapse and that sort of thing. But look, we were just really happy to get in front of the Finance and Expenditure Committee, and our timing was just perfect because a couple of weeks later, all hell broke loose and they were scrambling for answers. So we have laid the seed.
And I think, isn't it true, Don? I think the next step is the House, the committee has to prepare the report, and we actually submitted questions submitted answers for the questions they asked during the committee and more detailed answers after the fact.
Yeah,
once they have prepared their report, that goes to the House, and then the House decides either to note it or to do something about it. And from there is the next phase we move on to. And we'll be talking more about that next week when we actually show the video of our presentation to the Select Committee. Okay, we got another question here. This one's from Himmel. Are you worried that this reform could end up spawning a shadow bank system?
I'm not sure what you mean by shadow bank system.
Himmel, do you want to come on and explain what you mean? Where's Himmel? There he is.
He's muted though. Do you want to take yourself off mute?
Hey.
I've unmuted him. There he is. Go ahead, Himmel.
Yeah, so this is kind of from like Hyman Minsky, where he would say that anyone can create liabilities. So basically money, it's just getting it used, getting it accepted. So if you look at globally, there's this whole euro-dollar system, banks that are offshore from their jurisdictions, creating liabilities and taking deposits. So I guess kind of the question is, do you worry about bank-like institutions which take deposits and lend out, spawning, outside of this framework?
Yeah, we are concerned about that, and you've got Facebook and Libra and the like that are on the horizon. So for us, there would have to be enabling legislation to say that our digital currency could only be created by the Reserve Bank, and then that would be encrypted, and only the Reserve Bank could issue currency. Now, there would be other international banks that may well try and muscle in, but that would be our approach. Our digital currency could only be created by the Reserve Bank.
Don, isn't it fair to say that actually that was one of the focuses in our submission to the Finance and Expenditure Select Committee? That gave it some urgency because there are some of these alternative currencies trying to muscle their way in.
Yeah, well, that's right. But then COVID-19 muscled them out of the way. And so it's now become a backstory to the main event. But yeah, that was a key issue for us.
Yeah, so it is a concern, but all the more reason to implement what we're trying to implement. We've got another question here from Robert. Are there any examples where sovereign money creation has been done?
Very good question, Robert. Not in the 100% fashion that we have put forward. However, Canada, the Bank of Canada, for 42 years issued funding to the provinces and the territories for infrastructure. So they put in the subways, they put in the highways, they put in the St. Lawrence Seaway, they constructed airports, all with low interest loans, and that money was paid back to the government. So the money kept in circulation within the government coffers. It was very highly profitable, and it only finished once Canada applied and was granted leave to join the G8. And part of the criteria was they had to adopt the same financial system as everyone else. So rather than upskill to the Canadian model, the Canadians downskilled to the international worst practice.
Don, would you consider what we did in the 30s to be issuing sovereign money?
Yeah, it was, but the banks could still issue a portion of their funding. It wasn't at the level that it is now, but sure, in 1936, the Reserve Bank put in millions of pounds into the economy, and it thrived. Now, on a similar vein, the Japanese central bank has been buying up their national debt, and so the bank is paying interest to itself on its national debt. So that's fiscally neutral. And China has been pumping huge amounts of money into its economy, and that empowers them to go buying up companies all over the world. So we don't have a level playing field. The Central Bank of China is directly funding other aspects of the Chinese economy to enable them to go out and buy land and properties all around the world.
Right. John's got a follow-up question here. And I noticed he made a comment too about he'd watched the select committee proceedings, and you'll see that next week too if you tune in. There was one member who was eating his lunch, and you can hear him rustling all the way through, which was quite funny. Anyway, John's follow-up question is, can you separate the Reserve Bank's zero-interest financing of government debt from the larger question of the reserve ratios of the private banks, which is apparently struggling to move from 10% to 15% or so, let alone 100%? I think this triggered the MP, yeah.
I think that they're dragging their heels. It's not like they're struggling. they're actually, a lot of their profit is disappearing overseas. They could actually up their reserves by retaining a bit more of their profit rather than migrating it overseas into their shareholders' profits. So I think the governor of the Reserve Bank said when the ANZ said we will withdraw from the New Zealand market if we have to go to 10%, and Adrian Orr's response was the New Zealand banking industry is the second most profitable in the world. There is no way the ANZ is going to withdraw from the New Zealand economy because it will take a huge hit on its profits. So I think the banks are dragging their heels and crying poverty.
Can I come in a little bit on the question of the reserve?
Sure, Lowell, unless you're going to contradict me.
No, I'm supporting you, of course, Don. I always support you.
I'm just having you on, Lowell.
Yeah, I know. So there's the thing to remember when we're talking about reserves and particularly the settlement accounts at the Reserve Bank. The thing to remember is that if it's public money, it's not the bank's money. So when you're talking about the reserves, those two things have to be separated out. So as we put more public money into circulation, the amount of private money that the banks put in could actually drop quite a lot, in which case their reserves could well fall. Does anybody understand that?
I don't understand it at all.
Thanks, Lowell. That's good.
I thought I'd just try you out because I've been working on this in the last few days. So it's something I just wanted to try out on you.
Thanks, Lowell.
Thank you.
Now we've got about 10 minutes left. Does anybody else have a question? Are there any more questions? No. Sounds like not. Deirdre put her hand up, I think. Do you want to ask a question, Deirdre?
Discuss what people thought this morning of the, is it allowed as a question, the 8:30 this morning, two economists on Radio New Zealand, whether anyone heard it. And
yeah, I was Steve Keen and Michael Riddell, from the Reserve Bank.
Yeah, I was delighted at the end that they said they would be talking to each other. At the opposite end of the political spectrum.
Yeah, we Sue and I had quite a few conversations with Michael Riddell back when he was with the Reserve Bank on the express condition that it was off the record. So I won't cover what he said. However, in each meeting he seemed to contradict himself, and so it was very difficult to understand where he was coming from. Sometimes he was supporting our lead, and other times he was tearing us to shreds. So he seems to have a foot in both camps, depending on.
We had that same experience. In banking reform in 2000, a debate in Wellington with him and Michael Robotham, who'd just written The Grip of Death, and it was very unclear what Michael Riddell said. One thing he did say today was that the Reserve Bank has it on record that they recognise the way that money is created. Did anyone hear that?
Yes. That's an old paper that they've got hidden in the back of their archives section, and it's not an unequivocal. It's not 100% clear. But it does state that the Reserve Bank does not create the digital currency, but it's not a black and white statement.
Okay. Last chance. Any last questions or comments? Oops, what do we got? Something here.
I've got half a question typed down, but I can talk faster than I can type.
Go ahead, John.
It's this whole question about who actually owns the RBNZ. I realise that they have a Reserve Bank governor, and he's is mandated to follow the finance policy of the government, of the sovereign government. But that's where when they call them independent, but I often get the feeling that they're actually not independent of the private banks' manipulation. You know what I mean?
That's a very good observation, John. It seems like the Reserve Bank is independent of any influence by the government, but it does follow chapter and verse what the banks really want, with minor admonishments every now and again, because most of the banks have failed in their regulatory requirements, and we had a golden opportunity after the Royal Commission in Australia to investigate our banks, our financial system, and the Reserve Bank came out and said there is nothing wrong with our financial system, and that just was it left me speechless, because the banks are creaming it here, and a lot of what they do is, well, not a lot, some of what they do is highly questionable.
Right, Don, we got another question here from Michael Cooper. Is there anything or anyone that can be influenced immediately, specifically to help shape New Zealand's COVID-19 recovery using sovereign money?
I don't know. I'd open that up to the floor. Anyway,
Ashley Bloomfeld, how about him?
Well, Grant Robertson's one.
Yeah, Martin is on the call, isn't he? Martin, you're in the Labour Party. Why don't you speak?
Hi, Deirdre. Who should we influence? Well, definitely Grant Robertson. But I think it's a much bigger issue, because Grant, like any politician, particularly one in government facing an election, is going to sort of put a finger up in the air and test the wind. And one of the challenges we've always had with this issue is getting it out into the wider community, so that there is actually not just a sense of people lobbying for it, but of what we might call important influencers supporting it. And the people that the social credit ad highlighted, and hopefully many more to come, are probably just as important as at the moment as getting into the ear of Grant Robertson, because I suspect that's far more what he's going to be looking.
I actually went and spoke to Grant Robertson in 2012 when he was in the opposition, and I put forward our proposal for the Reserve Bank to issue our currency, and he said, "Oh, that would be a courageous move." And I said, "Well, just cast your mind back 120 years ago. A young woman by the name of Kate Shepherd came and asked her local Wellington MP if women could get the vote, and I'm pretty sure he would have said, 'Oh, that's going to be a courageous move.'" He laughed at that, and he said, "When we're constrained by current thinking," and he left it at that. But we have approached him several times, and he's been influenced by Michael Cullen, who is of the old school. He doesn't believe the Reserve Bank should get involved. He's very much a hands-off sort of person. So
He's also got Treasury people, and Steve Keen, when he visited a few years ago, I met him down at Ralph Manji's place after he'd had a big talk in Christchurch, and he did say that he visited Treasury and there were some good people in Treasury. So Treasury's has an influence on Grant as well. The other thing is the Reserve Bank governor and deputy governor themselves, who haven't ruled it out.
Yeah, that's right.
That's right.
You know what? Neither is Grant Robertson. I mean, I don't know if you heard him say in the 1 p.m. briefings, one of the ones that he took, someone from the floor, a journalist specifically asked him, what about helicopter money? What about these things? He says, we have not ruled any of those out or in.
Right.
He's open to it. He needs for all of us to sing really loudly to give him the courage to do something bold.
And I can tell you there's a group of economists who are meeting on email of all places. They are meeting regularly, Jeff Bertram and a lot of the other economists. They want to, they've sort of got a parallel group going, and Wise Response has had a Zoom call with Wise Response people and Jeff. But unfortunately, Jeff, although he is one of the best proponents, is digitally challenged, shall we say.
Yes. Okay, we're down to 2 minutes. Anybody else got a comment or question?
I think you've just muted yourself, John, rather than unmute yourself.
Oh, sorry. Yeah, just I've thought a lot about the fact that, you know, back in the day when the English banks were issuing their own notes, back in, when was it, 1840 or whenever, that way back, when they caused an inflationary, from what I understand, they had a sort of a collapse of their money because the banks were issuing too much notes in the old way, and the English government outlawed the ability of banks to create their own banknotes. I think that's a historical, if I've got the right history.
Yeah, that sounds right. Yep.
And the issue now is that they're issuing digital currency in the same manner, and it's just a matter of updating thinking from paper and coin to cyber money. And
absolutely.
And the fact that they even use the term printing of money now is just an archaic concept.
Yes.
That it's almost like they think people can't understand, you know, anything other than banknotes.
Yeah, that's right.
So.
Okay, folks, that's all the time we have tonight. Don, do you want to tell us what's happening next week?
Yeah, we've sort of let the cat out of the bag a wee bit, but we'll be covering our petition and how we managed to get the number of signatures we did, and then going through the select committee process and the like. And we also want to get some ideas as to how we can influence the politicians. So if you have any ideas, then please bring them to the call, and we can then discuss how we can maximize the penetration we've made so far.
Sounds good.
Okay.
All right. Thanks everybody for coming tonight.
Yep.
See you next time. Yeah. Bye.
Bye.